In this video, I'm going to explain how you can scalp using the fair value gap. Now, I know there's a lot of misconception when it comes to scalping. Several traders will tell you you don't need to know where the market is going to scalp. But in my opinion, for me to scalp or get into any trade, I need to understand where the market is going, whether it's going to be bullish or bearish. And in this case, overall, you can see that monthly overall is bullish. And in this case, I'll most likely prefer to scalp for price to go to the upside, because scalping for price to go to the upside will be a higher probability, most especially once we see price come down into this fair value gap right here. So once we're in there, I'll be looking for significant key levels that I'll take those scalp trades off of. And an example of those significant key levels is this fair value gap here, resting at discount, resting below equilibrium, which is at discount zone. So price mitigating this key level, I scale down to daily time frame, and I can confirm there's also a fair value gap right there, resting directly below equilibrium, which is discount zone. The moment price is mitigating that position, what I will do is I'll start to scale down into the 4-hour to see the structures lower high, lower low, lower high, lower low. The moment price creates that lower low, tapping that equilibrium, mitigating into that discount zone, what I'll do is I'll go into 15 minutes time frame, and on 15 minutes time frame, what I'll be looking for is price creating an uptrend, creating higher highs and higher lows. So an example of what I mean is this. So you can see after we mitigated that equilibrium zone and the fair value gap resting right there, we created a higher high right here. The moment we created this high right here, as you can see, we have a lower high, lower low. The moment we create this high right here, create a low, mitigating this fair value gap. This fair value gap can literally be my first entry for my first scalp trade. I'll use this low as my stop loss, and I'll target a 1:1 risk to reward ratio. Now I'll target a 1:1 risk to reward ratio, price going to the upside. That being the first scalp trade, the moment I'm still seeing another expansion, price leaving another fair value gap, right here will be my second entry, my second trade, and I'll target 1:1. Stop loss will be right here. So let me just show you this. Right here, first entry, second one. Stop loss right here, targeting 1:1. Second one right here, stop loss, this low, targeting 1:1. And you can see both trades smash take profits. These are two trades, all wins, using fair value gap. You can see the fair value gap, fair value gap. Now, once I've got this win, the next thing I do is I'm looking for opportunities for next key levels that price will come back into. And you can see that after we delivered straight to that take profit, price left another fair value gap right here. What do? Same thing. Entry position right here. Stop loss this low. Why am I using this low as stop loss? Because this is my lower high. This is my higher low, and then created a higher high. This is the higher low, higher high. That is why this key level is my stop loss. My target 1:1. And you can see, even though price played around, after all that playing around, straight to take profits. 3 trades, all smash take profits. So if you do have any questions, feel free to let me know.